All right, guys, everyone wants to know what the heck is going on with Bitcoin. All these other assets are falling out of the sky. We got stocks down, we got gold down, we got bonds down, people are freaking out, oil spiked, everyone's worried about inflation, and people want to understand, why is Bitcoin still green? How the heck is it that the asset that's supposed to be a beta to all risk is somehow up given the geopolitical conflict?
Anthony Pompliano begins by stepping into a world of chaos where stocks are crashing, gold is falling, bonds are breaking down, and fear is spreading across global markets. Yet somehow Bitcoin is holding strong, forcing investors to question everything they thought they knew about risk. He dives straight into the data, revealing that long-term holders are aggressively accumulating, quietly absorbing supply while panic dominates headlines, and at the same time, institutional giants like BlackRock and Morgan Stanley are accelerating their move into Bitcoin through ETFs, signaling that this is no longer speculation, but a structural shift. As geopolitical tensions rise, especially around Iran, Bitcoin is beginning to behave not like a high-risk asset, but as a neutral, decentralized safe haven, completely detached from any single government or financial system. With volatility dropping, adoption expanding, and demand quietly building beneath the surface, Pompliano makes it clear this isn't just another market cycle. This could be the moment Bitcoin starts redefining its role in the global financial system.
Well, the simple thing is that we can just go straight to the data. First, let's look at Bitcoin long-term holders. Bitcoin Archive here shows that the Bitcoin long-term holders, they've bought 308,000 Bitcoin recently. Now, the reason why that's important is if you have a persistent bid in the market, then naturally you should expect the price to find a floor. Some of this is coming from Strategy or other companies in the public market, but also you're starting to see the OGs, the long-term holders that have been accumulating for a long time. They were selling last year, they're starting to buy again. That's usually a pretty good thing. One thing to remember is that Bitcoin's volatility was like an 80 or 90 vol asset, but now that's compressed down to like 35 or 40. So basically got cut in half or so. Well, that makes sense. If all of a sudden the drawdowns used to be 80%, 85% in bear markets, but now it's only been about 50. I don't know, I'm not a mathematician, but that seems to be working in our favor. Now, the other reason why I think that there is quite a bit of excitement and enthusiasm is that Morgan Stanley recently filed to actually publish a Bitcoin ETF. They see what BlackRock's doing. They see all the money that's being printed. BlackRock is now a Bitcoin company. They literally make more money from their Bitcoin ETF than any other product in their suite. Congratulations to them. Super smart of them to launch it, and obviously it's been very successful. Fidelity, they're in the game. You got companies like Bitwise or Van Eck. They're all trying to get a piece of this pie. And guess what? Morgan Stanley, they ain't going to sit by and let this thing go without them. And so Eric Balchunas over at Bloomberg, he says that we are going to see the Morgan Stanley ETF go live this week. It's obviously going to be a very big deal. But if we have long-term holders accumulating, and now we've got a net new thing like the Morgan Stanley ETF, which has massive distribution due to their sales team, what's likely to happen? Well, in my eyes, it makes Bitcoin the shining light in a sea of red, according to Iran. Now, why do I say according to the Iran conflict? Well, if you think about what's been happening is investors are scared. There's uncertainty. There's chaos. When's this thing going to end? Are we going to bomb away civilization? Are we going to take out every bridge, every energy facility? Or are we just going to say, hey, you know what? We win. We killed a bunch of people and we took out their regime and now we're just going to go home and let the rest of the world fight it out over the strait. I don't know what we're going to do. Frankly, it's way above my pay grade. But what I do know is that investors are trying to figure it out right now, and they seem to be flocking to Bitcoin because it is a digital, decentralized, non-sovereign asset that isn't tied to any one country. That obviously is really valuable. Now, I went on CNBC recently, and I talked about this. And so take a listen to how I described it to Andrew Ross Sorkin.
Bitcoin's been the shining light over the Iran conflict. I mean, stocks are down. You see bonds going down. You see gold going down. Bitcoin has been flat to slightly up. And I don't know if you can take a victory lap in the sense of over the last year, it's been the opposite. Bitcoin's been down and those assets have been up. But I do think that people are saying to themselves, well, I thought that Bitcoin was supposed to just be kind of beta to the rest of these risk assets. And so if everything else is selling off, why is Bitcoin not selling off? And so I do think that there's a little bit of light at the end of the tunnel for Bitcoin investors who have been taking a couple of beatings.
Do you think this was just a Bitcoin winter and we're now in some kind of pseudo summer?
I think that volatility has significantly compressed in Bitcoin. It was, an 80, 90 vol asset. Now it's like a 40 vol asset. It drew down 50%. That's kind of what you would expect in that kind of volatility environment. And I think that there's just a lot of people who hold Bitcoin who say, look, I like it at $60,000+, and the geopolitical uncertainty and chaos actually makes me want to own more Bitcoin rather than less, because this thing is neutral and isn't subject to any one country.
Is it happening from individuals, or do you think it's through ETFs, or what do you think is happening?
I think it's a little bit of everything, right? One of the things that people have long talked about with Bitcoin is how do we get mass adoption? And that was the kind of the phrase everyone used. And this is what mass adoption looks like: is you have individuals, you have companies, you have ETFs, you have countries.
But does that mean that the price discovery suggests that this is not on its way to the moon?
Well, I think
meaning you maybe arguably has been more stable than some of these other things you're describing. But at the same time, we've had Cathie Wood and so many other people, by the way, including yourself, I think, who've talked about, I was thinking about
higher prices.
Tom Lee talked about, $500,000, $1 million of Bitcoin. And we obviously have.
Yeah, I think if you look at gold as a good example, people used to talk about $5,000 gold price, and it was at $1,800, and everyone kind of thought it sounded crazy, right? It will get there. I think Bitcoin is a very similar thing. What the time frame is very, very hard to nail down. But what I will say is just look at the compound annual growth rate. If the stock market compounds at 8 to 10% a year, Bitcoin should do something that is multiples of that.
But are you seeing the corporates? I mean, there was a whole argument that corporate sovereigns, the sort of big institutional money, was going to end up in Bitcoin. And we talked about that almost endlessly around this table about a year ago. And that was what was going to drive the price. And that doesn't appear to be happening.
There's two things that have happened. One is I think that there are a lot of countries who are saying, hey, how do I participate in this without explicitly going and buying Bitcoin itself? And so you see them doing things like JVs on the mining side and stuff like that, especially the Gulf countries. But also you've seen a number of disclosures where country sovereign wealth funds have gone and taken positions in the ETF. And so I don't think it's, kind of this like chaotic, enthusiastic, hand over fist buying of Bitcoin that people thought they were going to do in their central bank. But I do think that there has been, allocations that we didn't have just 2 years ago. And that, it's kind of like a slowly and then all of a sudden. And I think that's probably what we'll see here.
Zooming out, the macroeconomic environment also favors Bitcoin. We are currently in a world of high government debt, persistent inflation, monetary policy constraints. Governments face a difficult dilemma: fight inflation aggressively, risk economic slowdown, stimulate growth risk currency debasement. Many analysts believe the likely outcome is gradual debasement of fiat currencies. And when that happens, capital looks for alternatives. Traditionally, that meant gold. But now, Bitcoin is increasingly seen as a digital store of value. Over time, this could lead to a massive capital shift from traditional assets into Bitcoin.
Now, the reason why I think that this is interesting is because my friend Mel Madison, he recently said something pretty interesting. He said that narrative follows price. A lot of people think that the price goes up once the narrative changes, but everyone's been through the euphoria phase. All of a sudden, price is down, everyone feels real bad, sentiment's in the toilet, then price starts a little jump, everyone starts to get excited again. So narrative follows price. And so the way to think about this is that there's no great Bitcoin narrative, according to Mel, right now. And the chart tells a very different story. He says, here is where you buy. Only 4 times in the last 5 years have you had this opportunity. I've kept my mouth shut, he says, on Bitcoin in recent months. But this is it. What a big statement from Mel. It was clear on Sunday as futures opened, everything was down but Bitcoin. Then all the other markets followed Bitcoin up. Bouncing at this level for 6 to 8 weeks is normal. That bouncing is done. Time to move up. Bitcoin futures, IBIT call spread, etc. I've added to all of them today. Now, Mel Madison is a smart guy, and obviously he does a lot of technical analysis. He thinks that we are at the breaking point, that Bitcoin has had enough. The bear market, he's declaring it over. Let's see what happens. I'm not sure. I don't know if it goes up, down, sideways, or backwards. What I do know, though, is I like Bitcoin over a long period of time. Now, if you also go and you take a look at Binance, again, Binance has really called out the fact that Bitcoin has been the shining light. They say that since the conflict began, Bitcoin and Ethereum both, well, I know we don't really like Ethereum over here so much, but Bitcoin and Ethereum both are up positive somewhere in the single digits. That's through 32 days of the conflict. But at the same time, the S&P that's been down 8%, Mag 7 down 10, semiconductor stocks down 12, and gold fell 13%. Those are big, big numbers. But maybe more importantly to me, and what I find more interesting, is Da Vinci Jeremy. He's been an OG. This guy's got one of the most gangster videos I've ever seen on the internet, telling people, go look at Bitcoin, go buy Bitcoin at like $1. He tweeted out and said that Grayscale tracked the top 15 cryptos every year since 2018. Every single coin got replaced. XRP, Ethereum, Cardano, Litecoin, IOTA, NEM, Dash, all rotated out. I don't even know what some of those are. He says new names show up every cycle. Solana, Tron, Hyperliquid. They come and go. Only one has held the number one position for 8 straight years without ever moving. Hashtag Bitcoin. There is no second best. There is no competitor. There is no next Bitcoin. There's Bitcoin and there's everything else. And it's not just Da Vinci. Da Vinci's a smart guy, man. I really, really like him. But guess what? My friend Jordy Visser, he recently told me why he thinks Bitcoin's going to win. He thinks that this is going to be a massive year for Bitcoin. Take a listen to what Jordy's logic is.
In the 1970s, do you guys want to know what the debt to GDP of the country was? Well, at that time, it was 30%, between 30 and 35. The equity market was 40%. So now we are at 120 on the debt side. So we're 3 times the 40. And on the equity side, we are 7 times the size. Mm-hmm. So what that means is they may want to do something. They may want to fight inflation. They cannot. So for Bitcoin, it is going to win for all of the reasons. We need cryptography. We need something that doesn't have a moat. I'm just telling you, when they make that decision to cut rates while inflation is high, I don't want to be the one sitting. That is the moment to me that they're going to have to come with something. You've got pressure from the White House. Isn't an independent Fed? All of the things there. And I don't think there's going to be a recession. So no recession, inflation on the higher side, run it hot. Debasement happens through a stock market, which kind of burns off that 220%. And my ultimate vision is that through multiple compression in 10 years, the equity market relative to GDP gets back to 100%, which used to be the cap. Now, for that to happen, if we compound GDP at 7% nominally for the next 10 years, for those of you playing the Rule of 72 book, that means we will have doubled GDP to 60 trillion, which is right where the equity market is. So if the equity market is unchanged for a decade, we've had debasement of the stock market. The money's still going to look for returns. And the reason I say this, we can't have it collapse, but we can have it go sideways. And the transfer goes from wealthy people that own assets and it goes to people who own Bitcoin. And the reason Bitcoin will go higher is because pension funds and endowments and all these places, they still have liabilities they have to meet. And to meet those liabilities, they have to invest in whatever is going higher.
Perhaps the most important insight is how adoption actually unfolds. It doesn't happen all at once. It happens slowly, then suddenly. Right now, we are in the slow phase. Institutions entering quietly, governments experimenting indirectly, investors reallocating gradually. But once momentum builds, the transition can accelerate rapidly. And when it does, price discovery can move much faster than expected.